Hello folks, it's Mentor speaking and welcome to the second, which was supposed to be the third episode of the 2024 Fundamental, Technical and Sentimental Analysis on YouTube. But unfortunately, the very first episode, the second episode got issues and I had to redo it. I left my computer home. I think something happened to the power, so it didn't complete the upload, and I'm far away from home at the moment. But that does not stop us from going back to the second episode and talking about it, and me showing you exactly what I was supposed to be showing. So now this is CAD CHF, but before we look at CAD CHF, I want to take you back to this same image. Now let me delete this. I want to take you back to, oh, okay, it's okay. Okay, it's fine. Let's look for, ooh la la. Okay, sorry, I'm not a very good computer man or iPad man. So let's look at NZD card. NZD card, that's where I have my NZD card, that's Rwanda, that's where I have my work, or what I'm supposed to be showing you. Okay, so right here we go, voila. So right here on my screen, I have this that most people have really seen and will ask me what it is. So let me break this down for you. One, we are going to look at fundamental analysis, technical analysis, and sentimental analysis. Like we all know that 95% of traders lose a lot of money in the forex market, not because they don't know how to trade, but because they follow what I would call what sentiments are showing them. So back to business. On my screen here, I have public money 95% bullish, smart money 95% bearish. Then below is the opposite. So what do we do here? There are three things we have to follow. This is a disclaimer of my own. I am not the best trader that you should be following. I'm not the best mentor you should be following. There are people that are far better than I am out there that you should be giving your precious time to. And this will only work for the wise. And there is one thing I want to share with you before we get started. We should have mutual respect. We should have respect for one another. We should have respect for one another. We shouldn't start battles, wars that we won't finish. I'm done with what I wanted to pass on. So let's be back here. Public money means the people besides the be rich, and the be rich is a course on its own that I will actually come up with. It is the be rich, B small I E, then rich, RCH. Okay, so this is I. Oh la la, my eye is ugly. So because I would really want to take you through, before starting with the be rich, I just take you through all this. This is not A, this is H. Just take it as the be rich, and let's see how we can. Let's see. Just give me 1 second. I get rid of this. So the be rich are actually okay. Let's see. Let's duplicate this, clone, then click on this one. Then we move it. Okay, now this is so complicated. so complicated than a computer itself. Well, the B rich. B space rich. Okay, so let's just assume we have the B rich there. So now what happens is the B rich, it's a series on its own, but at the moment we are looking at the fundamental, sentimental, and technical analysis. Just like I've told you, I am not the best mentor you should be watching at the moment. I'm not the best trader you should be following. I'm just, I was once where you are, and I want to share this information with you. There are hundreds and thousands of videos about trading on YouTube, but every single person has experience and their own way of viewing the market, and this is my way. Back to business. 95% people here are bullish. That is public money. 5% are bearish. That is the smart money or the B rich. Now what happens is, if you want to be successful, you need to listen to someone that has been where you are. You need to seek for advice. So this is what I do. This is my sentimental analysis. I'm going to look at my sentimental analysis. How am I going to do this? There is a website called notinvesting.com. My fxbook.com. So we are going to launch that in a few seconds. So this is what you're doing. We are doing our sentimental analysis first. Then after doing our sentimental analysis, we are doing our technical analysis second. And what are we looking at? We are looking at price above weekly highs and price below weekly lows. If I am to buy, just like you see on this same illustration here, I am to wait for price to trade below the weekly low, then I go long or I buy. Just like you see this other illustration here, I'm to wait for price to trade above the weekly high, then I go short. This is the second. Now this is the technical analysis. Then the last is the fundamental analysis. We are looking for high volatility news. Okay, or we are looking at the news. Now don't laugh at my drawings here. This is the best I could do on an iPad. This is the best I could draw here. It took me time to draw all these things, so this is the best I could do. So let me explain again. Before you decide before you decide where price is going, before you decide for that bullish or bearish move, this is what you do. This is one of the ways, and that's why they are series. We have the smart money concepts, or maybe the smart way of looking at things, or the fully technical analysis, whereby you have the imbalance, doing your analysis on a 5-minute time frame, 4-hour time frame, 2-hour time frame, 1-minute time frame. All those are the big bang and the inverted big bang strategies. All those are ways of looking at the market. I am not telling you that this strategy is better than the other. I'm not telling you that this video is better than the other. What I'm trying to tell you here is you combine whatever works for you together. Okay, this might not work for you, but the previous videos might work for you. My videos might not work for you. That's why I recommend you to go and check other people. Whoever works for you, stick to that person. Whoever works for you, watch that person. I'm not on YouTube to look for viewership. I'm not on YouTube to look for followers. I am not a shepherd either looking for sheep. I am a sheep leading my fellow sheep. I'm not a guru. I'm not earning millions and millions of Ugandan shillings on a single day. What I'm earning is what I would also want you to earn. I'm not going to deceive you that I've made a Bank of Uganda bankrupt. No. All I'm going to tell you is I am a sheep among my fellow sheep. I'm not a billionaire. I'm not withdrawing tons of money from the market every day. I know what I make a day, and I would also want you to be part of that team that at least takes 2,000 shillings home every single day. I'm looking for 2,000 shillings every day, every single trading day. I'm not looking for millions of Ugandan shillings. 2,000 shillings is enough for me and my family. Back to business. I am looking for this sentimental analysis. Then after the sentimental analysis, I'm going to technical analysis. Then after the technical analysis, I'm going to the fundamental analysis. Let me break this down. What you need to do is one. Let's go to investing.com, not investing, myforexbook.com. We look for this same structure here. So myforexbook.com, okay, which I might not find anywhere closer. Okay, voila, here we go, myforexbook.com. So remember what we are looking at, or what we're looking for. We are looking for this exactly, 5. Okay, not specifically 5%. 5% is where price reverses. Once it hits 5%, price begins to reverse. Or as it hits 10%, price begins to reverse. So let's look at 10% and below. But it can never go below 5%. What exactly can never go below 5%? It is the sentiment bar. So let's look at CAD CHF, AUD CHF. Here we go. We're at 12%. CAD CHF, we're at 8%. Now, the previous videos that I recorded, the AUD, the CAD CHF was actually trading at 5%. Just like you see here, short positions. You see the short positions. I'm doing my sentimental analysis. So what you do, you just look at if we have so many people buying, or if we have a large percent of traders going up, what we do, we go with the other number. Which number? We go with the lowest number, or the lowest percentage. So we don't do what the majority are doing, we do what the minority are doing, okay? So we don't go with the crowd, we isolate ourselves from the crowd, because this is public money, and the public money is at 92%. So this is what happens. If they show us that 92% of traders are long, this means this pair is selling. And we are going to sell until it hits 8%. Okay, we are going to sell until it hits 5% rather. So once it hits 5%, we are closing, then buying back. Okay, we are closing, then buying back. So as soon as it hits 10%, over here, we are buying back, or we are following. We are now doing what the 90% are doing. Then the number will keep decreasing while price reversing. Then once it hits 5%, we get a confirmation. You're going to understand. It's a journey. You will not understand all this in one video, in a single video, but this is a journey. But if I repeat myself, what we do is this. You come here on myforexbook.com, you look for whatever is trading from whatever. Let me say, for example, CAD CHF was selling. Okay, so let's go to CAD CHF for a minute. Let's use MentoredTrader. We look for CAD CHF. So CAD CHF was selling. What do sentiments show us? sentiments show us that CAD CHF was buying. Why? Because it shows us that 92% of traders were buying. So that means we're supposed to buy as well. So we are doing the opposite of what the sentiments are showing us. But not, are you going to be doing this every single time? No. Remember, they are reversals. Okay? So last week, I found it at 5%. And what had happened is it had rejected the weekly time frame, which is right here. Price had rejected that same area that I'm going to mark here. Okay? So at 10%, CAD CHF started reversing back up. Then by the time I recorded the video we had, CAD CHF was here. January 8th. It's when we recorded the second episode that got issues. So price was going up. Now, this does not mean CAD CHF is buying or CAD CHF is reversing back up. No. Let's go back to Trading View and I show you what we do here. So what we do, we are done with our, I'm pretty sure you're going to understand. I will make sure you understand. So we do what? We are not buying long term. We are still following what exactly? We are still following the 8% or the lower percentage of traders in the market. But when do we do that? Now, if you missed the 10% here, then what you do is this. You come back to the chart and do what? Wait for price to do this. Trade above a weekly high, then you sell. It trades below a weekly low, then you buy. So basically, if I take you to this is what you do. You switch to the weekly time frame. Okay, you switch to the weekly time frame. You wait for price to trade where exactly, and I've already marked where I want to see this price trade to. So this is a weekly time frame. Trades in this area. Now, do you see this area here? Do you see this price level? You can you record this price level, that is 0.64417. So around this area, I am waiting for CAD CHF to trade in here. Once CAD CHF trades in there, I am also waiting for it to come down here on a weekly time frame, trade below that low, which is now an old low. Then I push price where? Long-term bullishness. Do you understand? If you don't understand this, rewind the video. I want you to understand this as I repeat myself. So this is what happens. Okay? I want you to understand. I go to myfxbook.com to do my sentimental analysis. Why do I have 5% here? It's because only 5% of traders are making money in the Forex market and 95% are losing. So what I do is I go to myfxbook.com. Let's say, for example, let's go there right now and I show you proper analysis, how I'll do this. So myfxbook.com, I saw something here which I wanted to show you as an example. Okay, so we have Euro NZD at 16%. So Euro NZD being at 16%, this means we will have to wait for Euro NZD to trade to 5%. So it is showing us that Euro NZD is long. Okay, Euro NZD is buying, but Euro NZD is selling. So we want to get that reversal as soon as we hit 10%. So let's come to Euro NZD. Euro NZD. Euro NZD. There we go. So you see this? It is showing us that, you know what? We are bullish, bearish. It is showing us that Euro NZD is actually bullish, but in actual sense, Euro NZD is bearish. So what I don't know is if Euro NZD is recovering from a lower percentage up here to a higher percentage, or if it is recovering, if it is still going back down. Now that is one thing I don't know. But what you do is, one, you use a weekly time frame to tell where exactly are we going. Now this is a downtrend. Now this being a downtrend, we wait to trade above weekly highs. And you also mark the oldest low or the weekly low. Now I'm going to mark that low and mark this high, that area. So what do? We wait for price to trade above a weekly high, then we sell. Why? Look at the percentage. Look at the percentage here. Now it is showing us that 85% of traders are long, yet 16% of traders are short. So we go with the 16%. So as soon as we trade above the weekly high, we are pushing back price lower. Okay, we are pushing price lower. And lower where? Well, you know what you want. You might have a 100 pip target. You might have a 200 pip target. You might have a 50 pip target, profit target. But what you do, the most important thing is you not finding yourself on the wrong side of the market. Now, how do you know when to look for opportunities to enter the market? Now that's where this one comes in. The fundamental analysis, or looking at or looking for the news, the 3 stars or 2 star news, or 2 bull or 3 bull news. High volatility news is very important. Now let me show you one of the mistakes most people do. Most people tend to follow whatsoever is happening in or fundamentally. So this is what I do. Let's do this, and I'm going to show you an example. So let's say, for example, you've noticed that we are trading towards 10%, or we are at 10% going down. You just come here. Let me say, for example, this week I'm looking for high volatility news, or maybe I'm looking for news. If I'm doing my fundamental analysis, this is one of the things most traders are actually doing wrong. They click here, they want to read whatever is happening, looking at the graphs, they are marking these numbers. You're wasting your time. You're wasting your time by trying to sneak into the Central Bank of Japan to know who the next bank president is going to be. You're reading a bunch of things. Okay, they come here to the news, economy, and you find this person very busy reading all these things. This is not going to decide where price is going. These things that you see here want to decide where price is going. Trust me, if you're used to reading them, then congratulations. I have no problem with you. But trust me, I've been where you are. And this is what I used to do, wasting a lot of my time. So this is what I do instead. I'm not advising you not to read this. I'm not advising you not to subscribe to Bloomberg. That is the money you have to waste. But what I personally do is this. I come here. Let me say, for example, next week. I will come to next week. Then filter out. I'm only looking for high volatility news or medium. Then I apply. I don't need every single news. No, I just need to look for high volatility news or moderate volatility news. So what I do here, I'm going to look at, let me say, for example, this week, there is a currency pair I'm looking for, and that is GBP AUD. So if I'm looking for GBP AUD, I will come and look for, you see, I've already marked it and I shared this with you on Twitter. So I will come and look for the news. I'm looking for the news between 16th of this month and the current date. So between Monday and 16th, I don't know when Monday is going to be. I think Monday is going to be 13th January, 14th. I think Monday is going to be 14th. So between 14th and 16th, I'm looking for opportunities to sell. And where exactly? I'm looking for opportunities to sell above that price level that you see. Do you see the circle? Exactly there is actually my entry is going to be between that circle, between those two lines above last week's high. So why? It's because I'm waiting for price to trade above a weekly high, then I sell. There is a lot going on here that I cannot explain in one video, 2 videos, 3 videos. Okay, it just needs time, and there are so many things we cannot share with you because some of them we keep to ourselves because everybody has a secret. But you coming here to read all these things, you're doing a wrong fundamental analysis. Put your focus here. Come look for high volatility news. Just look for important things. Okay, not you reading so many things, trying to understand when is the next president of the Central Bank of Japan be replaced, when is this and this and this happening. No, that is you wasting your time. Combine these 2 things, these 3 things: fundamental analysis, technical analysis, and sentimental analysis. So what I do, I just come here, look for high volatility news, look for that pair. Now, this is actually telling me that on this day, we have high volatility news. So what you do, you are specifically going to look for opportunities to trade above weekly lows or below weekly, above weekly highs rather than below weekly lows, okay, on that specific day. Just like I've shown you here on AUD, on GBP AUD, I already know when I'm going to trade or when I'm going to look for opportunities to sell above that high. And when is that? So next week we have news on Tuesday on GBP. We also have news on Tuesday on GBP at 3 o'clock in the morning and then 3:30. Do you see up here? Retail sales year over year. Now this is GBP, moderate volatility, then AUD, moderate volatility on that same day. You understand? So that is 3:30, 3 o'clock, 3:30. You understand? So at that moment on Tuesday, I'm looking for opportunities to enter the market on GBP AUD. So if price trades above this high or above the circle on Tuesday or before Tuesday, I'm looking for opportunities to sell on Tuesday. If I get a manipulation on Tuesday into that area, I'm still pushing price lower because it is in my reversal zone. So this is how you do your analysis. In the future videos, I'm going to share with you other things. Now that is the 3rd episode after this one. I'm going to share with you what I was supposed to share with you. A simple recap before I shift to some other things. A simple recap. So what you do, you go to myfxbook.com, you do your sentimental analysis. You're looking at anything trading from up to down, okay, in terms of percentage. Public money against smart money. Smart money is the least percentage. The public money is the highest percentage of traders. Then after that, you come to the pair, you do your technical analysis, looking for price trading above weekly highs, looking for price trading below weekly lows. Then after that, to confirm the date of trading or the day of trading, you go to either investing.com or any My Forex Factory news websites. Then what you do is you just look for high volatility or moderate volatility days of trading. Allow me stop this video from here. We create room for the upcoming videos after this one.